Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Just want to thank everyone for coming to the live stream today. We had a great stream. I would definitely watch that first 30, 40 minutes of that video if you have the time. There were a lot of things I was able to talk about that are significant in moving forward with the markets in general. As we look at yesterday's action, we saw a sharply higher opening as the market participants were excited about the potential for a vaccine. We did trade above a key technical level, but we were unable to hold that. And I will talk about this in the technical section just to give you some more perspective on what that potentially means. As I've been discussing over the past several months, and especially over the last 6 weeks, the metrics that we continue to see come out of the economy are much better than expected. Empire State Manufacturing came out, and that was up at 17.2. Industrial production at 5.4%. These are much better numbers than expected, and it's going to continue to be that way as this reopened trade continues to evolve. And this is going to keep sentiment at least relatively positive. I don't think there's going to be any negatives that come out of this. Now, I talked about this several times, that the bad earnings reports have already been cooked into the books, but we're actually seeing some really good earnings reports come out, which is contrary to what most people were expecting as we came into this season. Now, next week's going to be huge because we have a lot of earnings coming out next week. Will be the real test that we're going to have to get through to see what's going to come out of the economic numbers as well as these earnings reports and that forward-looking statements that come from these companies. A lot of companies are bailing out of any forward-looking statements at all, just saying they have no way to measure these things. As we get deep into the earnings season next week, it's going to be very substantial. But the last couple of days of this week, tomorrow we have the unemployment claims coming out, another expectation of approximately 1.2 million new filings, but the number to watch is going to be that continuing claims. If it comes in under 18 million, that's going to be a positive, set the tone for further support and keeping an underlying bid in this market. The dialogue I want to keep out in front right now is this new rotation or new leadership. There's something else that I realized in doing my research tonight. I went through great detail what's going on with the FANGs, with the exception of Apple is the only one that still looks very positive. All of these stocks seeing a spike and a reversal in prices, which suggests to me that we're going to see a consolidation at these levels. When I was looking at the Nasdaq tonight, not only is there a rotation going on from the standpoint of the small cap, mid caps, and even the S&P starting to outperform the Nasdaq, but there's also potentially going to be a rotation within the Nasdaq stocks and even the leaders in the Nasdaq. So I'll be doing some research over the next several days and hopefully can come up with some ideas and what sectors and groups to look at for this rotation to occur in. I believe this will be the areas that we're going to want to watch. Let's go ahead and take a look at the charts and see what they're telling us for Thursday. Before getting into the technical section tonight, I want to review the WaveTech database. Another surprise, we have 2,327 new technical buys for daily 1.2. The short-term database has moved back to 80.57% bullish. So we're continuing to see a lot of stocks rotate in. And as I discussed in last night's video and a couple of nights ago, what we're seeing is the stocks that are rotating are these small and mid caps. Some of the other trades have been on for a while. We should start to see rotate out, but for right now, we're just continuing to stack back in on everything. And it is the short-term 1.2 model, which is the most aggressive model, piling in this configuration. Another thing that occurred, basic materials, consumer non-cyclical, are new trades. They just started, and we're seeing many of the other. Energy's been on for 53 days, financials up on 49 sessions now, 57 on healthcare, and services have been long for 56 days. All of those have exceeded their average holding period. They're still in a hold configuration and not in an underperform. So there's still more to develop as we go forward. This is very significant. Now we have 13,357 symbols now showing short-term trends, and I mentioned earlier, or 80.57%. This is potentially what will push the market through this next level. There is some vulnerability here, I must say, when we get to this frothy level that we're going to see some rotation here. It appears, looking at the constituent list, is that a lot of these mid-cap and small-cap stocks are the ones rotating in. So it makes sense based on the hypothesis that I've been presenting to you that there's going to be a new leadership role start to emerge in the markets. As we look at the S&P futures, S1 has been hit at 3203. The overnight low so far is 3200.75. We spiked through that just briefly. We're now trading back above S1. R1 is 3235. My expectations are that we'll see an S1, R1 trading range. There is some vulnerability for today to trade down to the S2 number, which is 3186. The weakness that we're seeing here overnight is just a question about if there is a vaccine, when will it be there? So I think markets once again got a little bit ahead of themselves yesterday. And even though we were able to print back above that 32.35 level, the configuration here on the futures suggests that if we did trade down to 3186, it should bounce, and I expect that we will remain on a closing basis above the 3200 level. The other thing to note on the futures is that the PPMs are fading a little bit, as PPM1 is still a positive 0.32 and PPM2 is at a positive 0.13. So we're still in a trend mode, which suggests that the 10-period moving average will be the major support. Now the value is currently at 3167. It's rising about 5 handles per day, which would put us up around the 3172 level, and we've got S2 at the 3186 level, and this is why I'm suggesting we could see some weakness down to that level. What will be important is how we open. If we open back above on the futures, above the 3212 level in the morning, that will at least keep the support and tell us that the likelihood of an S1, R1 range would be likely. Now, I don't know if there's going to be anything to drive the markets tomorrow that could get us to do an R2 on the upside, which would be a penetration of some of the key resistance levels. The next couple of days could be vulnerable to a sideways to downward scenario. We could trade as low as 3168 in this pattern, but we're going to stay above that 10-period moving average, especially with the PPM at 0.32. Going to the daily SPX, this chart suggests that 3181 on the cash will be the extreme for today. They're suggesting there could be substantial amount of weakness early on in the session. The key level will be that 3200 even level. Right now, with the futures off at about 14 handles, we're going to open up maybe at 3212. So there's going to be substantial support just at that round number, but there is some potential weakness for today and possibly into Friday to move down to 3181. I mentioned in the opening comments about the employment claims and the continuing claims. That may be a trigger for the markets to get bullish again, but we're definitely seeing some fading here going on in the PPMs, and they're stalling at the moment. That just tells us that we're likely to see more consolidation, most likely between S1 on the cash. We're looking at potential for S1 and R2, that 3232 level. That's almost to the highs yesterday. The volatility suggests that the S1, R1 are the most likely range, and the expansion, because we still have positive PPMs, would suggest that we could see the 3232 number and go to R2. The configuration on the weekly chart continues to suggest there's at least 2 to 4 more weeks of an upward pattern, and I continue to focus on a number that is critical from my viewpoint. The highs of the last high isn't that critical to me, but 3280, I discussed last night about the cluster of numbers that are coming in at that level. That is going to be a key pivot point, and I don't think the markets are going to do a lot with the balance of the week as we look at Thursday and Friday, other than maintain. We could, like I said, we could see some short-term downside, maybe backfilling some of this rally that we've seen early this week. But overall, we're going to continue to stay in this upward sloping pattern that's sitting here on this weekly market grid. You can see the number is 3249 R2. The high so far this week has been 38. We came close to satisfying an R2 hit in Wednesday's session. There's still some possibilities of going up to that level, but R3 is 3283. I'm not sure we're going to be able to get to that unless there's some surprise in these claim numbers or something that can generate some more enthusiasm. Otherwise, I think we start to waffle back toward that 3180 level that I discussed in the futures and in the daily cash charts. Going to the Nasdaq futures, we're currently down 87 handles overnight, or 0.82%, seeing some definitely downside. But as I've been talking about, the fangs and the top end of this index is starting to show reversals in the patterns. Apple is the only one that still has a nice clean pattern, but everybody else, Google, Netflix, Facebook, Amazon, all of them have a reversal look pattern suggesting that we're going to have a high level consolidation. As I mentioned in the opening comments, I am looking for some of the secondary stocks in the index to start to rotate, and that's what we're seeing from the database. We're starting to see a lot of those stocks starting to rotate into the mix and demonstrating some positive trends. On the market grid, on the daily, on the Nasdaq futures, we went completely flat. My expectation is just for the market to go flat and grind in a range. There's going to be some great trading opportunities. Right now on the downside, we're seeing the low 99.15. As we look at the market grid, S1 is 10,600. The low's been 10,575. We're just a touch below that. We may see it move further toward the 10,508. That would put the index down about 1% roughly. R1 is 10,765. Like in the S&P, my expectations are S1, R1. We penetrated S1. We could see an R1, S2 type market for Thursday. The weekly chart is the most revealing. We printed up into the grid 11,058. It hit the 11,000 target that I talked about several weeks ago. 11,121 is the R2 number. S1 is 10,703. We've actually been down to 10,358. That is an S3 low. What we've seen here is a reversal pattern. We'd have to take out last week's low to get a key reversal pattern. That number is 10,308. We've come very close to that, and if that's taken out, then we have a setup for a major reversal pattern at a high, and that will set the tone for 2 to 3 weeks of weakness. The other thing to notice here is that the PPMs, they have turned down. PPM 1 has cut through its first derivative, and all three of the indicators are showing a massive loss of momentum. But I do believe that the extreme at 10,269 on the grid will be where this market will hold. It's all up to Friday's close, which I'll cover tomorrow night as far as what's likely to happen as we go forward in the next couple of weeks. Big backdrop here is all of the massive amount of earnings reports that are coming out next week. And this is going to set the tone for lots of rethinking just about everything. As I mentioned when we were going through the database, we continue to see this positive rotation in the database, which tells there's a lot of longs, but like I mentioned, there is some vulnerabilities. When you went to 90 down to 65 and back to 80, the database, and we see the kind of buying we're seeing, and we go up to 80%. What I was expecting to see this happen is that the database would move back to around 74%, and then it would start a further rotation. What we're likely to see here is if there's no follow-through, we could see a complete reversal and start to see a correctional phase set up here. Nasdaq has led the way up. It has definitely thrown market sentiment into a short-term negative. The numbers that I've talked about in the S&P will hold. This may be how these spreads start to move better. The Nasdaq will be much weaker than the other indices. Even though they may decline slightly, we will see the Nasdaq actually demonstrate much weakness. It'll be interesting to see on Sunday night when the market grid is recalculated on a weekly basis on the Nasdaq how this thing is going to play out. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.